The current crash will be worse than the Great Depression. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought we'd have a look at this article from The Guardian, shared to me by a viewer, in which we're potentially facing a crash worse than the Great Depression. Everyone's referring to it, we're looking back at what happened there. What do you think, guys? Do you think we're heading for worse than the Depression? Feels like it. It does. But then again, no one in living memory went through it. So the pandemic has delivered the fastest and deepest economic shock in history. The financial crisis and Great Depression took 3 years to play out, and this crisis has taken 3 weeks. The Greater Depression beckons. Well, yes, that's true. When you're watching the market and it's all coming back, it's good, or you're watching what's going on in the news, I think this is going to be a drawn-out process. Even if we overcome this illness very quick, there's still going to be confidence shocks, there's going to be behavioral changes. It's going to be a long process, guys. The shock to the global economy from the illness has been faster and more severe than the 2008 GFC and even the Great Depression. In those 2 previous episodes, stock markets collapsed by 50% or more, credit markets froze up, massive bankruptcies followed, unemployment rates soared above 10%, and GDP contracted at an annualized rate of 10% or more. But all of this took around 3 years to play out. In the current crisis, similar dire macroeconomic and financial outcomes have materialized in 3 weeks. Let's just dwell on that for a moment. Earlier this month, it took only 15 days for the US stock market to plummet into bear territory, a 20% decline from its peak, the fastest such decline ever. Now markets are down 35%, credit markets have seized up, and credit spreads, like those for junk bonds, have spiked to 2008 levels. Even mainstream financial firms such as Goldman Sachs, JP Morgan, and Morgan Stanley expect US GDP to fall by an annualized rate of 6% in the first quarter, and by 24 to 30% in the second. 24 to 30% fall in GDP. The US Treasury Secretary, Steve Mnuchin, has warned that the unemployment rate could skyrocket above 20%, twice the peak level during the financial crisis. In other words, every component of aggregate demand, consumption, capital spending, exports is in unprecedented freefall. While most self-serving commentators have been anticipating a V-shaped downturn, with output falling sharply from one quarter and then rapidly recovering the next, it should now be clear that the illness crisis is something entirely else. The contraction that is now underway looks to be neither V, nor U, nor L-shaped, a sharp downturn followed by stagnation. Rather, it looks like an I, a vertical line representing financial markets and the real economy, plummeting. Not even during the Great Depression and the Second World War did the bulk of economic activity literally shut down, as it has in China, the US, and Europe today. The best case scenario would be a downturn that is more severe than the financial crisis in terms of reduced cumulative global output, but shorter-lived, allowing for a return to positive growth by the fourth quarter of this year. In that case, markets would start to recover when the light at the end of the tunnel appears. But the best case scenario assumes several conditions. First, the US, Europe, and other heavily affected economies would need to roll out widespread illness testing, tracing and treatment measures, enforced quarantines, and a full-scale lockdown of the type that China has implemented. And also based on the assumptions that the reports that we're getting from China are completely accurate. And because it could take 18 months for a vaccine to be developed and produced at scale, antivirals and other therapeutics will need to be deployed on a massive scale. Here's the thing as well, the virus can mutate. It's going to have more chances to evolve now that it is spreading to a significant number of humans. Second, monetary policymakers who've already done in less than a month what took them 3 years to do after the GFC must continue to throw the kitchen sink of unconventional measures at the crisis. That means zero or negative interest rates, enhanced forward guidance, quantitative easing, and credit easing, the purchase of private assets, to backstop banks, non-banks, money market funds, and even large corporations, commercial paper, and corporate bond facilities. The US Federal Reserve has expanded its cross-border swap lines to address the massive dollar liquidity shortage in global markets, but we now need more facilities to encourage banks to lend to a liquid but still solvent small and medium-sized enterprises. Third, governments need to deploy massive fiscal stimulus, including through helicopter drops of direct cash disbursements to households. Given the size of the economic shock, fiscal deficits in advanced economies will need to increase from 2 to 3% of GDP to about 10% or more. Only central governments have balance sheets large and strong enough to prevent the private sector's collapse. Really, they're kind of forcing the collapse of the private sector. But these deficit finance interventions must be fully monetized. If they are financed through standard government debt, interest rates would rise sharply and recovery would be smothered in its cradle. Given the circumstances, interventions long proposed by leftists of the modern monetary school, including helicopter drops, have become mainstream. Oh boy, this is sounding delightful, isn't it, everyone? I'm sure this won't have any unintended consequences. Unfortunately, for the best-case scenario, the public health response in advanced economies has fallen far short of what is needed to contain the pandemic, and the fiscal policy package currently being debated is neither large nor rapid enough to correct the conditions for a timely recovery. As such, the risk of a new Great Depression worse than the original, a Greater Depression, is rising by the day. Unless the pandemic is stopped, economists and markets around the world will continue their freefall. But even if the pandemic is more or less contained, overall growth still may not return by the end of 2020. After all, by then, another virus season is likely to start with new mutations. As I said, therapeutic interventions that many are counting on may turn out to be less effective than hoped, so economies will contract again and markets will crash again. Moreover, the fiscal response could hit a wall if the monetization of massive deficits starts to produce high inflation, especially if a series of virus-related negative supply shocks reduces potential growth. And we've seen that in a previous article looking at just global food hoarding, where nations are starting to limit the exports of food. And many countries simply cannot undertake such borrowing in their own currency. Who will bail out governments, corporations, banks, and households in emerging markets? In any case, even if the pandemic and the economic fallout were brought under control, the global economy could still be subject to a number of white swan tail risks. With the US presidential election approaching, the illness crisis will give way to renewed conflicts between the West and at least 4 revisionist powers, China, Russia, Iran, and North Korea, all of which are already using asymmetric cyber warfare to undermine the US from within. The inevitable cyber attacks on the US election process may lead to a contested final result, which, well, this is Bloomberg, so... Oh, no, it's not. It's Guardian. It sounds like Bloomberg. You know, which will charge us of rigging. I mean, yeah, okay, whatever. I mean, sure. Those hundreds of thousands of dollars in Russian bots, I'm sure they swayed the election. Definitely sure. Yep. They're going to be charged anyway of what's happening. So, guys, here we have it. A scenario for an even greater global depression. What do you think? Do you think this is where we're heading? Do you think the helicopter money, modern monetary theory, do you think it will save us? Can the central banks save us? And some people are going, oh, this is all just a cover for you know, the collapse of the system. I'm a little more skeptical of that. I seem to think that these central bankers actually think they're doing the right thing. They're trying to save the world with their money printing. Yeah, I think they think they're doing the right thing. What's your thoughts or opinions? Let me know in the comments below, guys. Thank you all for watching. If you're a fan of the channel, there's a few ways you can support us. You can like, share, and subscribe to the content. You can join the channel on YouTube or on Patreon for a small monthly fee. You can use our referral links at Amazon or eBay for your consumer purchases, or our referral links for Independent Reserve and Kucoin for the crypto traders out there. We have merch available from Teespring or the HeiseSays website. You can donate via PayPal, or you can send us gold via Gold Pass. Thanks, guys. Have a great day, and I will see you all in the next video. Bye for now.